Everyone's calling this the big one, the 2025 Bitcoin bull run. From crypto Twitter to mainstream headlines, the narrative is everywhere. This is it, the cycle of cycles, Bitcoin to the moon. But here's the real question. Is it already overhyped? Or is the real move only just beginning? In this video, I'll break it down step by step. Where we are in the cycle, the signs of overhype, the fundamentals that still support this run, the risks nobody really wants to talk about, and most importantly, how I personally handle my dry powder when the noise gets loud. If you want Bitcoin explained without hype or hysteria, you're in the right place. Hit subscribe and let's keep climbing this mountain together. Let's begin with the cycle itself. Looking back at 2020 to 2021, the pattern was familiar. We had the halving in May 2020, a steady build-up, and then a parabolic move that carried Bitcoin close to $70,000 by late 2021. Now, in 2025, things are very different. The halving still plays its role, but this time it isn't the main driver. The real catalyst has been institutional adoption through spot ETFs. Billions of dollars have flowed into ETFs this year. For the first time in history, pension funds, insurance companies, and family offices can get Bitcoin exposure as easily as they buy Apple or Microsoft. That changes everything. On-chain data reinforces the picture. Exchange balances are at multi-year lows while the share of Bitcoin held in long-term wallets keeps growing. This creates what I'd call a slow-motion supply squeeze. But here's the catch. A shrinking supply doesn't automatically mean the price can only go up. Timing still matters, and timing is where hype can cloud judgment. So let's look at the signals that suggest the market might already be running ahead of itself. First, muted retail interest, even at all-time highs. Bitcoin has touched new highs, yet retail interest remains muted. Google searches for Bitcoin are far below the levels of 2017 and 2021. Retail isn't piling in with the same frenzy. That doesn't mean disaster, but it shows this run is being driven by different players. Second, shrinking exchange reserves. On-chain data shows less than 15% of the entire supply now sits on exchanges. That's historic. Coins are moving into cold storage, into long-term hands. Bullish long-term, but it also means markets can dry up fast when volatility strikes. Third, altcoin rotation. Attention is broadening. Searches for altcoin are at a 5-year high. Ethereum is gaining traction, and derivatives activity in alts is rising. In past cycles, this rotation often marked the middle stages of a bull run, sometimes the later stages. It's a sign of heat beyond Bitcoin itself. Fourth, corporate treasury fatigue. Companies that were once celebrated for buying Bitcoin aggressively are no longer invincible. Their stocks, boosted by Bitcoin treasury mania, are now facing pressure. Investors are starting to ask, is there a real balance sheet here or just a Bitcoin bet? That shift matters. Lastly, putting it all together. None of these signs alone is alarming, but together, muted retail, shrinking supply, altcoin rotation, corporate fatigue, they paint a picture of strength, yes, but also fragility. Stay with me, because next we'll look at the fundamentals that might still make this the strongest bull run yet. Despite those warning signs, the fundamentals remain powerful. ETF flows, billions continue to pour into ETFs. Unlike retail, these are long-term investors. They don't panic sell at the first dip. Corporate and institutional balance sheets, more firms are adding Bitcoin to reserves, hedge funds are allocating, even governments are debating strategic holdings. This is adoption at a structural level. Macro liquidity cycles, central banks remain trapped, global debt is unmanageable. Eventually they will print more, not less. Liquidity always finds its way into Bitcoin. Shrinking liquid supply, every cycle fewer coins are available. Every cycle more are held by long-term hands. It's a ratchet effect, one direction only. And yet, even with fundamentals this strong, risks remain. Let's be clear, Bitcoin is perfect, but the market around it isn't. The Federal Reserve. Everyone assumes rate cuts are inevitable, but if inflation proves sticky and cuts are delayed, a stronger dollar could pressure risk assets, Bitcoin included. Geopolitical shocks, wars, sanctions, crises. These can shift liquidity away from Bitcoin in the short run. Regulation surprise moves from the SEC, new restrictions in Europe, hostile policies in Asia. None of these can kill Bitcoin, but they can slow adoption. Exchange and infrastructure risk. Remember FTX. A single collapse can trigger cascading liquidations. Trust in Bitcoin remains. Trust in intermediaries often does not. That's the battlefield we're on. So how do I approach this? I'm not a trader. I don't chase tops. I don't time every wiggle on a chart. My approach is simple. Hold Bitcoin long term and keep dry powder for the dips. When the market overheats, I don't panic. I wait. Because it always cools, and when it does, dry powder buys you more sats than hype ever will. Cycles will come and go, narratives will rise and fall, but Bitcoin's fundamentals, capped supply, unstoppable network, and growing adoption are the constant. So, is the 2025 bull run overhyped? In some corners, yes, the noise is loud. But Bitcoin doesn't care about noise. It responds only to supply and demand. That's why I'll keep holding, keep stacking, and keep waiting for the market to hand me those rare moments when dips appear. If this gave you perspective, give it a like and subscribe. I'll be here next week, still stacking BTC and still calling out the noise.